I'm Charlotte McLeod with investingnews.com, and here today with me is Chris Ritchie, president of SilverCrest Metals. Thank you so much for joining me. Great to have you here.
Appreciate you having me as well.
Really good to be speaking with you. I think it's going to be a fun conversation. And where I thought we could begin, since it's our first time talking, is by learning a little bit about you, how you got into the mining industry, how you came to SilverCrest.
Yeah, thanks. I've been at SilverCrest for about 6.5 years now after spending 13 years on Bay Street, Wall Street. So, I have a background of helping resource companies raise capital. And then this company was at a really interesting phase, and I more or less came in-house to raise capital for them. So here we are, 6.5 years later, we're producing. Sort of that phase of the company is behind us. Now entering a new phase.
Okay, and of course, we're going to get into talking about what's going on at SilverCrest right now. But before we go there, I thought we could look at the precious metals sector overall. So, of course, gold and silver prices have really been moving in 2024. And although some companies have also been moving, as a group, the precious metal stocks haven't been moving as much as some investors would like. So we were talking by email before this conversation, and you mentioned that this disconnect kind of all goes back to inflation. So I'm hoping that you can go into your thoughts there and outline exactly what you're meaning.
Sure, there are a million moving pieces to get a mine all the way from exploration to development to production. There's labor, there's fuel, there's steel, there's consumables, there's, again, a million moving pieces. And the cost of those moving pieces are going up more than the gold and silver price. So what we've seen in the last while is the margins of mining companies have not expanded. And in fact, many of them have actually contracted. For example, our labor costs have gone up approximately 50% in the last 3 years. So again, gold and silver is a proxy for inflation because of all the inputs that go into getting it out of the ground.
All right. And I think, many people are looking at what's going on there and they wonder what will it take to close that gap, right? We just got our latest inflation data, and I think it went down a little bit for the month of April, but it remains pretty persistent, and it sounds like it's set to remain quite sticky.
I think it will as well. We've seen people exiting the workforce. Not a lot of people are going into mining these days. So even if there were new projects to get started, we're going to be fighting over the same labor, the same talent and whatnot. So, a big part of, our strategy is to sort of acknowledge inflation and sort of build that into our base case and then figure out ways to beat it.
Right. And maybe we could talk a little bit about the company's strategy, because I think that ties in quite well here. So against this backdrop, SilverCrest has decided that it wants to hold precious metals on its balance sheet. So maybe you can talk a little bit about how you came to that decision and what it actually looks like in practice.
Sure. So about 2 years ago, a year and a half ago, we entered production. We were fortunate enough to have an amazing high-grade asset with high margins. We paid back all of our debt in the first 7 months, and cash was coming in. And the next obvious question for the team is, all right, what's next? What are we going to do? And some of the knee-jerk responses are, let's go build a new mine. And collectively as a team, we said, okay, well, let's slow down. Let's actually see how we performed on this one. And what we did is we took every single penny we spent from day one, all the way through to the end of the mine, and we assumed inflation in the future years of production, and we divided it by the amount of gold and silver we have today. And what we came up with was our total cost, our true cost. And again, we calculate this differently because we include every penny, was in the neighborhood of about $25 an ounce. And at the time, silver was 18, 19 bucks. So instead of just sort of that default of sell your ounces, get your dollars, start over again, we acknowledged that if we were to sell our ounces at that moment in time, all we'd be doing is crystallizing a loss. And the fact that we are sitting there with, we digging up real money and a money that's better than the fiat currency, we want to hold it. And, so we want it on our balance sheet. But again, from a business perspective, any company that sells their product below the cost to produce it, it's not a great business.
Right. So that definitely makes a lot of sense. And how long have you been following this strategy, and what's the long-term goal there?
I mean, the long-term goal is we want to give our investors more exposure to gold and silver. I mean, we've got this default mentality in society that, the dollars that we use do protect ourselves. But in fact, they're just really, really convenient medium of exchange. You're not using an ounce of silver to go buy a coffee. But at the same time, these dollars are subject to inflation. So for us, we want to give our investors more exposure to the metal. Every ounce we hold on our balance sheet has less risk because all the risks will be behind us, which means if the price goes up, our investors get all of that price increase. And, even further to that, we are subject to inflation. So the gold we have on our balance sheet protects us, right? It protects our business. And it's not just mining. Every single company that is subject to inflation has a responsibility to find ways to fight back. And we produce a product that does just that. So we want to hold it.
All right. And, you mentioned this is for the benefit of investors. And so I'm curious, it makes a lot of sense when you explain it, but sometimes when something new is happening, people don't understand it right away. So what has the reaction been from investors?
We've had a range. I mean, it's definitely new. It's definitely different. We have an old guard in our industry that has done certain things, a long time. So it's taken a bit of a challenge, and I'll give our board a lot of credit for being extremely open-minded on this front. We've had some investors say, it's not your job. It's not your job to hold ounces. And my response is, well, our job is to run a good business. And if the price of the metal is below our cost to produce it, we don't want to, sell it at a loss. Or I can hold gold myself. I don't need you to hold gold for me. And my response is, well, you can hold dollars yourself. We've got, over 90 million on our balance sheet. We want to give investors more of the metal. At the same time, I would say people outside of the traditional mining world think this is extremely simple. They think, of course, why would I want gold and silver? You're giving me more gold and silver. You're fighting for a better price. They're very, very open to it. So it's been interesting. I find non-mining people think this makes all the sense in the world. Retail people think it makes all the sense in the world. Some of the traditional investors have taken a little while to come around, but when silver's at $29-$30 and we started holding it about, $8-10 ago, they're a lot more open-minded today.
Okay, really interesting to see that range of reactions. I can imagine there's been a lot of interesting conversations. And so I'm not sure if you mentioned how much is on the balance sheet right now. And I know this is going to be a future question, but when would you be looking to sell? Obviously, we've had, as we talked about, prices are running this year, but clearly not enough for you to consider that at this point.
Well, first of all, again, we have Canadian dollars on the balance sheet, US dollars, Mexican pesos. So we fundamentally believe gold and silver is just another currency that we permanently want to have. So there's always going to be some we have on there. Again, we believe it's a better store of value. We mentioned the cost to get it out of the ground. That's one factor. One of the other factors is there's significant functionality that gold provides. And to give you an example of that, Charlotte, we took 400 assets over the course of 31 years in the gold space. And the price, our costs went up approximately 8% per year. And if you actually look at the gold price, the correlation of gold and our costs went up on a 0.97 basis. So almost a perfect correlation between our costs and gold. So therefore, we can use gold to protect our own business against inflation, right? So for me, there's a functionality. So to have as much gold on our balance sheet equivalent to our sustaining capital, to me, it's just good, prudent risk management. And then the final thought is, great, what if we do make a really good return today and we love the price? We sell it, now what, right? Now we have to go back to square one. And square one is only one out of approximately 750 mines makes it to production. And it usually takes somewhere between 15 to 20 years. So we then have to say, what currency is better to protect our value for the next 15 to 20 years? Is it fiat currency or is it gold and silver? So for us, not only are we making a profit today, can we sell it and then replace it way out in the future at a better cost? And, the trends say, no, we can't.
Okay. Really important considerations. And I can tell that this is a strategy that is evolving as you go. So I'm curious, we talked about how this is new, people are having interesting reactions. Is there anyone else in the mining industry who's doing a similar thing? And do you think this is something that may be picked up among other companies? Are you having that kind of conversation?
I'd love to. I'm trying to have the conversation. I think one of the very unique attributes of our mine is because we're so profitable, because we have financial flexibility, it means we have choice. And we believe we owe it to our investors to examine what all the opportunities that this choice and flexibility gives us. Unfortunately, many of our peers just don't have that same flexibility. They just don't have that balance sheet strength. So again, it's, we don't have to be a price taker. When prices are really weak and they're below the cost to produce it, I mean, that's definitely the moment we want to hold more. What we're hoping is more people have this conversation and put it on the list of ways to allocate capital. It doesn't have to be the only thing you're choosing. There's great assets out there to develop. There's times for a buyback. There's times for a dividend. All we're saying is this needs to be one of the choices that people consider.
Right. And you mentioned, okay, so not all your peers have the ability, flexibility to do this. I think it's interesting to take a look at the sector because, I hear quite often during the last bull market, precious metals miners didn't make the best decisions. Now, this time around, they're being a little bit more prudent. Do you find that's generally true, or what are your thoughts on that note?
Again, we've been so ingrained to use fiat currency. Our whole financial system is evaluated in dollars. So we really don't know how to count in gold and silver. So, everyone's default option is to convert everything back to that dollar. And once you've decided to hold a dollar, you have no choice but to go out and try to spend it. So I think, that's one base challenge we're trying to push back on. We're hoping now if costs do moderate and price of the metal keeps going, that, yeah, we will see margin expansion at some time. But we put our hands up and we take responsibility because it's the industry that's suppressing the price. We can choose to sell it. We can store gold and silver. Can't really do that with coal or iron ore. Once you produce it, you got to move it. We can choose to store it, so we don't. And when we don't, we're the ones selling the metal and pushing down the price. So, I think, again, it needs to be a choice to hold on. And if we do hold on, especially when prices are weak or the environment's weak, we can improve our return, which is hopefully improves our health and hopefully snowballs in the right direction.
It's definitely it takes a mindset shift as you're talking about, just hearing you say it's the industry that is suppressing the price in that way is quite a statement to make. I wonder if you had anything else to add there.
I mean, I feel like we've got this unique position where we have exclusive access to go dig this money out of this ground, and it's a product that we all use in our marketing, that we believe in the metal. But yet when it comes time to holding it, we choose not to. We choose to sell it for a currency that we market against. We don't like the fiat currency, but then we choose to hold our balance sheet in fiat currency. If the other side of the coin is central banks have exclusive access to the printing press. Now they're printing money left, right, and center, and they're buying gold. So we're in this weird position where they don't want what they're producing, and many people in our industry don't want what we're producing. And we're just putting our hands up to say, we like our product, we believe in the product, and we want more of the product. And yeah, we were hoping investors think the same way.
All right. And I think that that's maybe a good transition to talk about SilverCrest's first quarter results. We're talking a couple of days after those have come out. So I wondered if you wanted to share a few top level highlights from that report.
Sure. I mean, our guidance for the year it was to produce approximately 10 million ounces of silver equivalent. We're roughly 50-50 silver and gold. We're pretty unique in that we're 100% precious metals, which is great. The costs for us were going to be in the range of $15 to $15.90. In Q1, our costs were $12.90. We benefited from some lower tax, which will normalize. It'll rise in future quarters. We didn't quite spend as much money in certain areas, which helped our costs. But what that translates into is roughly 60% operating margins, right? So for us, we beat consensus estimates in I think every category. But again, we're in this position now where that sort of flexibility at the operational level gives us that choice. So the market seemed to like what we were doing. We paid a bunch of taxes in Q1. We entered the world of tax paying, whereas last year we were still working off of some of our tax losses. But we're looking forward with prices today being substantially higher than in Q1, right? I think some people are starting to see, hey, why am I selling today if I know that Q2, while we're halfway through Q2, is already looking much better?
Right. And on that note, so on track for production guidance in 2024, what should investors be looking for as the year continues?
Hopefully consistency. One of the unique attributes for us is that we mine our material and then we create a big stockpile on the ground. And then our grade is quite high and we have medium and low grade. We blend that together to put into the plant. And that sort of consistency allows us to have really high recovery. So we're getting the most that we can out of that rock. And that has been giving us those consistent results. We've been in the range of 60% operating margins in the last 6 quarters or so. So hopefully that's going to continue. And one other unique attribute is the term retained earnings. That's kind of your scorecard. Have you been running a good business or not? Are you making money or not? Unfortunately, the mining industry has struggled, and it's not a critique. It's a really tough business. We had positive retained earnings of approximately $21 million. So to do that already after all the money going out the door to get everything up and running is something we're really proud of. So it's a unique attribute. And again, I'll bring that all back to the asset quality, the margins, and our choice.
Yeah. Of course, it all does end up relating back together. So that's what 2024 is looking like for the company. And I won't ask you to give me gold and silver price predictions, but I think it's interesting. Clearly, you're bullish on precious metals. I think it's interesting to take a look at what you see coming broadly as the year continues, and perhaps into the future for the metals prices.
Yeah, I mean, I think a common theme that people have been talking about is not many people are out there trying to build new projects, right? The costs are going higher, accessing capital is difficult. And because it takes, that 16 to 20 years, supply of all things are starting to get pretty squeezed. And we've seen that with copper recently and uranium, everything else. The money is not coming back into the space to encourage new supply. And again, the costs are going higher. We hear this word, oh, we need more copper. Prices are going up. We need higher prices. We need higher margins. The price going up on its own doesn't matter. It's price relative to cost. And right now, the incentives to bring on new supply still aren't that exciting. So it just bodes well for someone who's already in production that the existing supply is worth a lot. So we're thinking prices do go higher, but we're also in a position if they do go lower that we can be opportunistic in terms of either holding on to more ounces at low prices or buying back shares at lower prices. Again, just using the choice that our flexibility gives us.
Right. That really resonates. I think I'm constantly hearing that the mining industry needs to attract capital from outside the sector, and we really need to see that. So for you, do you think it's those higher margins versus the higher prices that starts to bring that in and maybe get some discoveries or development going?
Again, I think it just needs, like, if you were to make a list of, all the challenges over the next 20 years, I mean, grades are going down, a lot of people aren't comfortable going to some of the strange places in the world where some of these commodities exist. taxes, permitting, ESG, it's not an easy forward-looking trajectory for new supply. So I don't necessarily see visibility of a lot of new supply, which is why I do think, again, companies already in production are in a bit of a benefit or in a better position today.
Right. And as we're starting to get to the end here, I did want to ask for your advice for investors who may be looking at precious metals companies. They want to get involved, but maybe they feel a little bit discouraged about some of the performances that they've been seeing. What advice might you have there?
Understand the risk. I mean, I think there's, we were one of those early stage companies that went from a 5 million market cap to, 1.8 or 9 billion Canadian today. So we did sort of run that gauntlet. Lots of risks on the way, but it's not easy. Not every company makes it. Costs do go higher. So I think it is a challenge. So for people who do want to invest, just know where on the spectrum you want to be. I mean, if you're thinking very long term to protect your purchasing power, there's nothing wrong with buying the physical metal. Royalties and streaming companies don't have as much operating risk. Cash flowing companies are obviously, healthier than the ones you've yet to build. So again, I think just for people to understand, if you're investing in a mining company, sometimes you've got more exposure to the mining related risks and less exposure to the metal. And that's one thing we're trying to do. We're trying to give people more exposure to the metal and minimize the operating risk.
All right. I think certainly you've given everybody a lot to think about today. And just before I let you go, I'll put it back to you and ask if there's any final thoughts that you would leave investors with.
Man, I think one key thing is I think a lot of people are talking about rates going down, right? Everyone's kind of hoping rates go down. I think there's a scenario out here where rates can go up. And, I think just making sure from a risk perspective that people have enough flexibility and safety in how they are managing their own portfolios to make sure that they can withstand some of the volatility that we're probably going to be having here for a while.
All right. I think that's a good note to wrap up on. So thank you so much for coming today to go over what's going on in gold and silver and with SilverCrest. This was really informative.
Thanks for having me, Charlotte. Appreciate it.
Of course. And once again, I'm Charlotte McLeod with investingnews.com. And this is Chris Ritchie with SilverCrest Metals. Thank you for watching. If you like this video, make sure you subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below. We'll see you next time.